Welcome to Ask the Expert, a daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During today's live session, we will be running a poll, so please do engage with that and I'll reveal the results at the end. And to make sure you're registered for QuickBooks free annual conference, QuickBooks Connect, look out for the link in the live chat. Taking place virtually on the 9th and 10th of March, the event brings together entrepreneurs, small business owners and accountants together to grow, learn and connect. I myself have been to the QuickBooks Connect a few times now, both in person when we were allowed to do huge conferences face-to-face and the online version as well. And I highly recommend that you sign up and take part in that sessions. Today, here to answer as many questions as I possibly can for you. Before I do so, just a quick introduction about myself in case you haven't seen me before, bit of a background about what I do and where I work, and then I'm just going to do a very quick update on self-assessment and making tax digital for VAT before jumping in and answering all those questions. So if you haven't seen me before, I'm a chartered accountant. I have worked at MHA Moore and Smalley for just coming up to 22 years. I did a degree in accountancy at Hull University, left there and joined the graduate trainee programme at Moore and Smalley. And I worked my way up as a trainee all the way through up to the current position I hold now, which is Head of Digital Solutions. MHA Moore and Smalley is a large independent firm of chartered accountants based in the northwest of England. Offices in Manchester, Liverpool, Preston, Blackpool, Kendal, Lancaster, just to name a few. And we offer a whole wide range of services that anybody would expect to see from a large firm of accountants, be that statutory accounts, audits, tax advice, tax compliance work. We have an outsourced payroll team. We have a team of independent financial advisors, and we also have a corporate finance team which help people raise large sums of money to fund expansions, help buy and sell businesses, and help do management buyouts, family buyouts to pass businesses on to the next generation. So a very wide range of services that we can offer our clients. My role as Head of Digital Solutions is to make sure that we have a proactive and a very good service to clients looking for cloud accounting software. So we have two arms to the team that I manage. We do compliance work, so we'll do people's year-end accounts, management accounts, VAT returns, bookkeeping, that side of things that is ongoing within an organisation and business, year on year, month on month, week on week even. But we also have another arm to us, which is where we help new startups set up QuickBooks Online and the right apps to go with that for their specific industry. We also then do training in terms of how for them to use that software, and then provide ongoing support thereon as obviously technology changes. We have well over 1,000 clients using QuickBooks Online and an elite partner with Intuit. So we have a vast array of expertise. And as I said, I helped set that whole team up, and I manage that team on a day-to-day basis now. So if anybody has got any questions about QuickBooks Online software itself, feel free to ask those today. But as I mentioned, we work with an awful lot of startup businesses. So if there's any startup questions today that you have, again, more than happy to help with that. One of the other areas that we got heavily involved in was making tax digital for VAT, because it meant that people had to start using compatible software to submit their VAT returns, and they had to keep digital records throughout the year. Making tax digital, or MTD, for VAT came in just under 2 years ago, and it was for all VAT registered businesses who turned over more than £85,000 worth of taxable turnover. As of April 2022, that is now going to be expanded to incorporate all VAT registered businesses. So if you're a small business and you decided to registered for VAT for whatever reason it might have been, and you only turn over £60,000. Previously, you've not had to comply with making tax digital for VAT. However, you will have to comply from the 1st of April. And that compliance works in 2 ways. The first way is that you will no longer be able to submit your VAT returns through the government gateway. You will have to submit it through compatible software. And the other area of MTD is that you need to keep digital records. So you're not allowed from April to be able to keep records in a handwritten format. So just keeping invoices in a folder and maybe handwriting sales invoices out, that is no longer allowed. What you need to do at the very basic level is set up an Excel spreadsheet and list all your purchases and all your sales within there. You would then need to have a separate column on your spreadsheets for the VAT, and then you would need to total up the VAT on your inputs and outputs. And then you would need, if you're just using Excel, to link that to bridging software. The bridging software will then submit the VAT return for you to Hmrc. You might already use a piece of software that isn't compatible for MTD, maybe an old version of Sage or old MoneyWorks, or a package that you've got for free somewhere that allows you to keep some of your bookkeeping but doesn't have a facility to file VAT returns. Again, if this is you, then you will need to use bridging software. And the idea is that you keep all your records within the piece of software that you currently use. And at the end of each quarter, or if you're on monthly VAT returns, end of each month, you would download all the VAT information into a CSV file or an Excel file, and then you would link that to the bridging software and submit it to Hmrc that way. Sounds a bit complicated, but actually bridging software is fairly straightforward, and once you've done it a few times, it's really simple and easy to do. However, I personally would recommend that you use a piece of software that is fully compatible. QuickBooks Online, for example, allows you to keep your records digitally, and it allows you to submit to Hmrc directly from the software. You can also do this through all 3 versions of QuickBooks Online. So that's the Simple Start version, the Essentials, and the Plus. So you don't necessarily have to go for the top end £30 a month piece of software. You could go for the Simple Start version, which is around £10 a month when there's no discounts available. It's really simple to set up QuickBooks Online. There are loads and loads of tutorials online, and they even do free webinars to get you started. So I would highly recommend having a look at it. Hopefully, if you're watching this video today, then you probably already have heard of QuickBooks Online, or maybe even use it already. If you are using it, but you're not submitting VAT returns via QuickBooks, then again, look at the videos for turning on MTD. Or if you want to have a go yourself, it's really simple. In the taxes section of QuickBooks Online, you just click into it, click on the VAT column. You may have CIS and other areas as well, but the VAT section of the taxes, and there's a little box in the top corner where it says Enable MTD. If you click on that, it will get you set up. You do just have to make sure you've registered with Hmrc first. It will prompt you within the software for that. The registration can take anything from a couple of hours through to 48 hours. It's a very simple form, only takes minutes, but it takes Hmrc some time to update their systems. Once you get a notification to say that you're registered for MTD, you can then turn it on within the software and away you go. Nothing else changes, which is why we would highly recommend using software such as QuickBooks Online. Simple, easy and effective. The other bonus of using QuickBooks Online is that you can then start to improve the efficiency of your bookkeeping itself. Feeds directly from your bank, raising invoices on the go, sending them to your customers, snapping receipts once you go to the petrol station, buying little bits of materials that you need. All those tools that are within the software really help make it as efficient and effective as possible for you. Finally, the last thing I just wanted to mention before I start taking the questions is the self-assessment. So self-assessment deadline is normally the 31st of January each year. The self-assessment deadline was extended to the 28th of February 2022 for the filings of the 2021 tax returns. So if you've missed the January normal deadline, please don't panic. You have until the end of February to get those self-assessment tax returns submitted. There's no fines for submitting after January, and there's no fines for making the payment after January, but the fines will be introduced after the 28th of February. So just a little reminder that if you haven't already done those self-assessments, please do so. Right, enough of me talking. I will start listening to some of your questions. So feel free to answer, as I said, ask whatever you feel you need to, and I'll get through as many as I possibly can. And at the end, I'll just leave you some details of how to contact me if I haven't managed to get to your question. So the first question has come from Jack on Instagram direct message. I'm looking to find a decent cash flow app that integrates with QuickBooks, but I'm struggling to find something that can manage multiple currencies. Any ideas? Hi, Jack. There are, as I'm sure you'll have found if you've been trying to find a decent cash flow app to integrate, there are many, many options out there. Certainly, Futurely does deal with multi-currency. We've used that ourselves with clients. I think Fathom has some reporting that it can do, but not necessarily the multi-currency cash flow side of things. And I would also just have a quick look at Fluidly. Fluidly is a very simple cash flow tool. It's more of a rolling 12-week plan at the basic level. You can add that up, but you can put scenarios into there of what happens if I increase this sale, what happens if I take on more staff. I'm just not 100% certain whether it can handle the multi-currency. Because the clients we use it for are all smaller UK-based businesses with no overseas trade or purchases, so that they don't have the multi-currency side. But I would have thought it possibly would do. So that's Fluidly. And like I said, Futurely definitely does do multi-currency. We've used that ourselves. So hopefully either one of those two will help. We have a message from Lewis on Instagram direct message as well. Lewis says, I'm just starting my self-employed business and I want to make sure that I'm prepared for MTD. At this rate, it looks like I might be able to do around £80,000 in the coming year. Would you suggest registering for VAT now? So, Lewis, I'm not sure exactly what it is that you do. And that does actually impact on the advice as to whether you should register for VAT or not. If you are dealing with the general public, so let's say you're a hairdresser or a plumber, or maybe a joiner, an electrician, you will be dealing with members of the public predominantly, unless you're working for larger construction companies. But let's assume you're working with the general public. If you register the VAT, then whatever you sell to your customers, whatever services you provide, you would have to charge VAT on them. So that means your price of, let's say, £150 a day either includes VAT at 20%, or you need to charge 20% on top of the £150. Now, if you're in a very competitive market and you are fighting for customers, and your competitors are not VAT registered, then you will be at a disadvantage for registering for VAT, because you will either automatically have prices 20% higher, or you're going to have to take a cut on your profit of 20% on your income that you're generating, because you're going to have to pay a chunk over to Hmrc. The other thing to consider is what it is that you buy. So if you're turning over £80,000 a year in the next year, then you don't have to register for VAT. If your costs are invariably labour-based, so no VAT, or you're buying items from abroad, so again, no VAT on them, then actually there's very little to claim back against the VAT you're going to pay over to Hmrc. So again, it may not be worth registering. However, if you are in a sector where your sales are what we call zero rated, so children's clothing, for example, various food items, you charge VAT on your sales, but they're at 0%. And therefore, by being VAT registered, you can claim VAT back on all your purchases that have VAT on them, but you're not actually claiming VAT over to Hmrc, which means you end up with a repayment each quarter. So in that respect, it'd be great, yes, register VAT and claim back the VAT on your purchases. The other reason why some people register VAT when they don't need to is because they believe that they'll be fast growing and they want to have everything set up from day one. And by registering for VAT, it also gives the impression that your business is a bit bigger than it maybe is, because people will automatically assume that you must turn over £85,000 because you're VAT registered. So there's a few pros and cons there. I would highly recommend, Lewis, that you speak to an accountant. If you haven't already got one, go online, find somebody. If you're using QuickBooks Online, there's the find an accountant facility within the software. Speak to somebody and say, just want a little bit of advice. Most people will meet you for a no obligation chat for free. And at worst case scenario, you're going to pay a small amount to find out what is best for you. And it could make a big difference to your cash flow. So I would definitely recommend that you speak to somebody. There's also different types of VAT schemes. There's the normal standard VAT, there's cash accounting for VAT, there's the flat rate scheme for VAT, there's annual accounting for VAT. So there's various different things that you need to consider before jumping in and registering. Good luck with your decision on whether to do it or not. I've got a message from Jane on Twitter. She says, I use bridging software currently. How do I figure out if it does everything I need it to do for MTD? Is there a list of approved software? Jane, yes, there is a list of approved software. If you go onto the gov.uk website and you search for MTD, hidden in amongst everything will be a list of approved suppliers. What that won't tell you is exactly what each bridging software does. So the bridging software that's out there, some of it is, I think there's even some free bridging software if you can actually source it and find it, but it can be anything from £5 per submission up to £300 a year. It depends on the software that you're going for and the facilities that they have within it. The bridging software just needs to be able to link to your core information. So that could be downloaded off another piece of software, or it could be directly into Excel. It just takes the totals and it sends that information to Hmrc. Some bridging software will then show you whether the payment has been received by Hmrc when you paid it by BACS or direct debit. It will also show you summaries of the confirmation. Other bridging software shows you a little bit more information. It just depends on how much detail you want to go into and how much you want to pay. The next message is from Fred on Instagram direct message. Fred says, I'm just a bit confused. Why do we do making tax digital? Surely submitting 4 or 5 times a year just creates more work for us. I don't seem to see the benefit to business owners. So, Fred, I think you may be confusing making tax digital for VAT with making tax digital for income tax. So making tax digital for VAT didn't change the frequency of VAT return filings at all. If you were on monthly VAT returns, you continue to do so. If you were on quarterly VAT returns, you continue to do so. If you're on annual VAT returns, you continue to do so. So there's absolutely no change in the frequency, or there's actually no change in the information that Hmrc receive. The difference is that it is automated from software. The idea behind that is that people can't make transposition errors typing in to online forms or using the government gateway. Sometimes people type in the wrong figures. Also less likely to miss things out, forget to add in a line if you were using it manually. So that's why the Making Tax Digital regime came in. It was to reduce errors on bookkeeping side of things. You, I think, may be talking about income tax for Making Tax Digital. So the difference here is that currently you do a self-assessment filing once a year. Under the Making Tax Digital for income tax rules, you will end up doing 4 submissions, possibly 5. Currently, it's proposed at 5, but there are talks to make it into 4. That does not come in for another 2 years at least. So there's no rush yet. the reason why they are doing it is because Hmrc have to give information to the government about how much tax they expect to collect each year. And the government uses this as part of their budgeting tools. Now, getting that information once a year from individuals means that it's quite hard to budget on how much tax is coming through. By having quarterly updates from individuals and sole traders and partnerships, it will mean Hmrc have a better idea of how much money is going to be coming through to the Treasury. You will not pay quarterly at the moment. You'll still pay annually. Eventually, we suspect that you will go on to maybe quarterly payments, but that is way, way down the line. And there is absolutely no confirmation from Hmrc that will even happen. It's just something that is expected may happen. So hopefully that explains why there are benefits to Hmrc. In terms of your question as to I don't see why there's a benefit to business owners, there actually is a really good benefit to business owners. So Fred, you might be a really good business owner that's using software and keeping your records up to date as you go along. There are an awful lot of self-employed people and sole traders who literally look at their bank statements on a day-to-day, week-to-week, month-to-month basis and pull all their records together at the end of the year because they're not VAT registered, because they don't have to do it on a quarterly basis. What will mean now is that because they'll be using one software, which will enable them to keep everything up to date quickly, it'll be easy to keep it up to date. They will actually be able to see how their business is performing each week, each month, each quarter. They'll be able to submit their information to Hmrc and see what their running tax bill is looking like. And that will be really, really helpful for a small business to plan what they want to spend money on. There won't be the days of, I don't know how much my tax bill is. Oh my God, it's too much money. I haven't put any to one side. By submitting those quarterly returns, business owners will be able to see what liabilities they have coming up, and that will help them plan better, and it will help them invest in their business better. So I do see that there are benefits to businesses. The next question has come through from Kim on Facebook chat. And Kim has said, how do you deal with bounce back loans in QuickBooks? I didn't get any COVID grants, but took advantage of a bounce back loan. So Kim, a bounce back loan is a liability to the company. So within your QuickBooks, and I'm assuming you're on either QuickBooks Simple Start Essentials or the Plus Pro version. If so, what you need to do is in your chart of accounts, you need to add a new account or a new category. You will put it under the current liabilities category, and there's a section that says loans, and if you call it bounce back loan, you will add it into there. It sits as a liability, and once you start repaying that loan, which you probably will have already started doing that now, you will put each monthly payment to that category as well, and over time that balance will reduce. So I hope that answers that question for you. Emily has sent a message on Facebook Messenger. Emily says, our company is hiring our first admin employee. She'll be working partly at our home and partly at hers. Apart from the employee's liability insurance and a home working risk assessment, is there any other things I should get in place for her working from home? I don't think, Emily, there's any more things that you need in terms of insurance. You've got your employee's liability insurance. What you will just need to make sure is that you've got the right equipment, which I presume will fall under the working risk assessment, i.e. make sure the desk is at the right level, make sure she's got the right equipment. The working risk assessment should obviously cover things like handling heavy goods, because I don't know what sector you're in, but it doesn't really matter. We, as an accountant, we do handling heavy goods assessments, about how to sit properly at your desk to reduce stress on your back, stress on your arms, that type of thing. There will also need, I would recommend that you do a computer security sort of, not test, but risk assessment, so that they can make sure that they are going to, because your employees are almost like your front line of defence against spammers. So make sure that she's up to date with how to spot if there's a spam email, if there's an email that happens all the time at the moment, people posing as a supplier, saying the bank details have changed. and people pay them and it turns out it wasn't a supplier at all, the supplier's emails were hacked. So making sure she's aware of things like that, I would say, because she will be part of your first line of defence. Other than that, just make sure that you've got a really good solid agreement of when she works from home and when she'll work with you. And maybe leave it open to the ability to move that to working in an office environment if you grow and decide to take on some offices at some point in the future. The next question is from Jamie on Instagram direct message. Jamie says, I'm a bit confused whether I do or do not need to set up for Making Tax Digital yet. I heard they pushed back the deadline. I also thought it wasn't for people under £85,000. Can you explain who has to be compliant by April? Hi, Jamie. Yes, I will clarify what I said earlier. So from April, anybody VAT registered has to comply with MTD. It's irrelevant on your level of turnover. It is anybody from the 1st of April. It is only VAT registered people though. So if you are a business and you are not VAT registered, MTD does not apply for you until 2024. So it's just VAT I'm talking about today. If you are VAT registered, the way that it works is it's from your return that starts after or on the 1st of April. So if you have June, December, and March quarter end, September quarter end, your first quarter end will be June, and that starts on the 1st of April. So you will need from the 1st of April to start complying with Making Tax Digital so that you can submit your June quarter VAT return under all the right guidelines. If you are a July quarter end, then you will start from the 1st of May. And if you're an August quarter end, then you will start from the 1st of June. So just to clarify, Jamie, it is about VAT Making Tax Digital this. It is not the income tax side. Income tax side comes in 2024. So there's plenty of time to get ready for that. The next question has come through from Omar on Twitter direct message. Omar says he wants to close his limited company as he's accepted a new job, but the company is almost £20,000 in debt. What can I do? Am I at risk of losing personal assets? So Omar, this is actually a really good question. So the good news is you're a limited company, and as a limited company, that is a separate entity to you as an individual, even though you are the shareholder, I presume, of your company. So what you need to do is, if you are in debt, you need to speak to a liquidator. If you speak to a liquidator, what they will do is run through your options. Ultimately, a limited company, if it cannot trade and cannot pay its debts, it can be liquidated, and whatever money there is within the organisation is then distributed to all the people that owe the company money, based on a percentage of the total money available and what they are owed. They can't come for your personal assets, and unfortunately it will result in those suppliers not getting paid the money that they are due. Sometimes people think that they can just leave the company to wind up. Unfortunately, I presume if you're in 20 grand worth of debt, there's probably some debt in there to Hmrc, and if there is, Hmrc would stop any striking off until a liquidator has got involved. So that is the very first port of call, and they will be able to advise you the best thing to do and the best next steps. The only way, I said that there's no way they can come after your personal assets. I'll caveat that, is the only way that they can't come after your personal assets is assuming you haven't been doing any fraudulent trading. If the company is found to have been fraudulently trading, then they can come after your personal assets. And that might well be is if you have taken out a load of money out of the business towards the end and not paid your suppliers who had raised their invoices to you prior to you taking all your money out of the business. But assuming that's not happened, you will be fine to close the company down, and unfortunately those people just won't get the money that is owed to them, but you'll have to do it officially and talk to a liquidator. So the poll results are in. Today we asked the question, are you registered for Making Tax Digital for VAT? 30% said yes, 40% said no, and 30% said I don't need to. So all I would say is to you 40% out there that are not registered for VAT, and I'm assuming you do need to if you're not in the I don't need to know category, have a look at QuickBooks Online, how that would work for you. Speak to your accountant if you need any help on how you register, but also go to www.gov.uk and search Making Tax Digital for VAT, and there is loads of information on there. We've got information on our website. If you go to www.mooreandsmalley.co.uk, that's MOOREANDSMALLEY. That on our website, we have a hub there, and there's loads of information about Making Tax Digital, including how to register and also things about the benefits of using cloud accounting software such as QuickBooks. There's also blogs and videos on there about bridging software, so take a look and it should answer any questions that you might have. If you have any further questions, I'm quite happy for people to email me and my team. We can be emailed on digitalsolutions@mooreandsmalley.co.uk, and we're happy to answer quick questions and hopefully get you on your way. So tomorrow, coming up on Ask the Expert, is Adam McCann, founder and CEO of Claimer, an online service which takes away the hassle and expense of claiming R&D tax credits. Tune in to learn how to find the right problem to solve for your startup. A reminder also that if you need any more advice, please join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. Have a great day, everybody.